Hey everybody, good afternoon. Welcome to 12-Minute Trading. My name's Doc Severson. Today is Monday, the 29th of July in 2024. Welcome aboard for those of you watching live, and most likely for those of you that are watching this through a replay, whenever this happens to be. I'll be here for maybe about 15 minutes or so. I'm going to walk through the different markets. Dave is not here today, so it's just going to be me flying solo. If you got any questions, make sure you get them in quickly, because I'm just going to kind of walk through the markets, tell you what I'm seeing right now, and tell you where I see the risks and the opportunities for today's market. All right, so the first thing I want to do is I'm going to go over to show you what the movers are this week. Not much today, but that starts to change as of tomorrow. We get into the consumer confidence and the JOLTS report, and then Wednesday is going to be a big one. Of course, we have some pretty big earnings coming up on Tuesday, Wednesday, and Thursday too, which are going to some degree overshadow what's going on here. But nothing really overshadows the Fed. The Fed comes out Wednesday afternoon, plus the chairman press conference. So that's coming up on Wednesday afternoon. And then Thursday, we have jobless claims, ISM manufacturing, construction spending, but big earnings that day. And then the jobs report on Friday as well. So that is also happening at the same time. If we look at what's happening, let's see, Tuesday we have Microsoft and AMD coming out with earnings. And then on Wednesday we have Meta in the afternoon. In the morning we have Boeing and MasterCard and Philip Morris. And then on Thursday, maybe the biggest of the bunch, Apple and Amazon, coming out in the afternoon. So you throw the Fed meeting in there, you throw jobs report as well as ExxonMobil in there on Friday morning, and you have what I consider to be peak risk for the entire quarter. Right? So the quarter that started on the 1st of July and ends at the end of September, this is it, man. This is peak risk into the end of July. So we don't have another Fed meeting until the October timeframe. Or no, is it September? Let's see when that date is here. It is 18 September. So that certainly could be something interesting to look out for, because right now we have a pretty strong probability or possibility of a rate cut by then. But we're not going to have nearly as many earnings happening around that time as we have right now. So the next earnings cycle starts in October. So this week is where we're collapsing all of this stuff into just a few days here. Okay, so let's go out to our charts and take a look here. Here's the S&P 500, and we have dropped just about 6% off of the highs from we had the bump after the attempted assassination for a couple of days, and that really marked the top of the market back on the 16th. We're down about 6% from there. You can see this quite clearly, that we're starting to run into a series of lower highs and lower lows. Price is staying pretty much right around the 50-day moving average. Now, 5,400 is a strong level of support. 5,300 is even stronger. So again, I'm not going to sit here and tell you which way I think the price is going to go. What I'm going to show you instead is how to use a Darvas box, how to separate these by different boxes. All right, so first of all, let's drill into the S&P just on the daily chart here, and I'll show you what I'm looking at. So we just want to bring it down to this level here. Okay, so first of all, the first thing that we want to look at is, I like to draw fib retracements because they show typical areas of support, especially when they come into play around a confluence of support. Okay, and so the important thing here is that we want to watch out for 38.2, 50%, and 61.8% retracements. You can see that as of Thursday, the price came down to the 38.2. And that was after a real strong move, about 6%. Now, does that mean that it's over? Well, we had back here in April, we had one really good strong move. This was, I think, also about 6%. And then what happened was the market put its foot in the ground and started to change polarity to a series of higher lows and higher highs. That was the end of the downtrend. This one has been a little bit faster. This one took a couple of weeks, better part of a month to come down to this level. This one's been much faster. So something else that we can look at here is if we go back to about a year ago, you can see that we had this period of starting in mid-July, right around the same time. And then we set up a series of lower highs and lower lows, all the way down to about a 10% haircut for the S&P. I think it was 985, something like that. So that was a complex. Notice how long that one took. That took about 3 months to go, about 3 months of corrective before it bottomed out and started to rip to the upside. So as you can see, we're just starting the process of breaking out. Now, what I would think would be highly unusual. So this is where we get into what's going to happen next. Again, I don't know what's going to happen 5 minutes from now, let alone a month from now. But if we have some kind of certainty coming back into the market, so I don't know what that would be, but if you think about what's happening between the confluence of jobs and the Fed meeting, interest rates, those kind of things, think about what the market would want to see from all of those disparate data sources. And if they all kind of come together and give the market a sense of certainty, a real strong sense of certainty going forward, then we could see a V-bottom. I think it's highly unlikely for us to do that, to see a V-bottom, because to get a V-bottom like that, you generally have to get negativity built up to the degree where everybody is convinced that we're just starting out with a long slog lower. This is the thing that I think that really helped the April bottom move to the upside, is everybody just assumed that it was going to be the same as last July, August, September, October, moving to the downside. It was going to take months of that. This thing, we had one good jobs report that came in light, and that was enough to turn this market around and get it to rally from 5,000 all the way up to almost 5,700. That's a strong move, right? So all it takes is just the right things to come along. So do I think this is going to happen? No, probably not. Probably not, although we could see some type of a rally if there is some good news that comes out this week, or good news that means that there's certainty coming into the market. So more likely what I would see is some kind of a bounce back up to make people think that we are going to go into a V-bottom, and then setting up for perhaps the next move down. Now, I think 5,300 to me represents very, very strong support, and for this reason. So if you look at the different support levels here, first of all, we have a swing test. This is a swing test on the weekly chart, and that is just below 5,300. So when the price comes up, former resistance becomes new support. Former resistance becomes new support. So that's right around 5,300 or slightly below there. That also is the 50% retracement, which is right at 5,310. And then, of course, you have just the round number support level. The market loves to run in 100-point increments for whatever reason. You can see that right here, where we have resistance at 5,500. It's been tough to get above that over the last couple of days. We've tried 3 times to get above 5,500. Hasn't happened yet. Former support becomes new resistance. Right, and so we have support right now is 5,400, resistance is 5,500. The price is stuck within a box. So we can look for the price to break above this box, especially a closing price would be relatively positive. Or if we break below here, then I think that we're heading for 5,300. And that would extend this to, I don't know exactly what it's going to be, probably close to 8% for that. Okay, so that's kind of the S&P. Right now, first level of support, 5,400. First level of resistance is 5,500. This is on the cash index, not the futures. If the price cuts down below here, then I would expect to see 5,300 provide support. Okay, let me know if you have any questions on that. I'm going to go over to the NASDAQ, and we have similar things going on in the NASDAQ. Now, what I've got here is I've got two sets of fibs up. And so the price has undercut the longer-term 23.6 retracement, but has come to support at the 50%. And this thing is almost 10% down, But remember, the NASDAQ can overshoot. There's nothing magic about 10%, right? So we saw 17% at the beginning of 2022, at the beginning of that bear market. So we're seeing the same kind of pattern here. We're seeing a series of lower highs and lower lows, lower highs, lower lows. To change this, we're going to have to switch to higher highs and higher lows. From there, we're going to have to trap too many shorts, get everybody negative, and then something happens, and then all of a sudden that comes out to the upside. So to me, the strongest level of support here is, again, the swing test, which is going to be down here at about 18.5 on the NDX. So that is the 18.5. That's a round number support level. That's the 61.8% retracement, and it's also the weekly swing test. So could we see this turn around? Yeah, I think we could. I think we could see a bounce, but probably at this point, it's only going to be to a lower high. Now let's go over to the Russell. Let's see what the Russell's doing. The Russell, we make fun a lot of the Russell, but the Russell's just kind of consolidating today, having difficulty breaking out. And I think the reason why, if we go to the Russell on the fractals, is because we had severe exhaustion, and now we have exhaustion on the weekly chart. So this is not going to necessarily just keep busting a move to the upside. It's going to have to slow down and consolidate for a couple of weeks at this level. And a high and tight flag would actually be very bullish. So a high and tight flag means that if the price stays within a very small range, which is tough for the Russell to do, but if it stays up in this range like this, between, say, 2,200 and maybe as far as 2,300, that would actually be really good. That would allow this energy to build back up again, would set the Russell up for perhaps some additional move in the third quarter. That would be good. But the Russell has been going nowhere for years now, has been doing all the heavy lifting of consolidating. And so we're seeing all of that potential energy being converted over into kinetic through this move. Good afternoon, everybody. For those of you joining me here, we're going to be just here for just a couple more minutes here. I'm just going to walk through the Dow, and then make sure if you have any questions or if you have any comments or anything, or if there's anything you want me to look at, please get those in really soon here, because the last thing in the world that I want to do is to be talking endlessly into an open microphone at this point. So that's the Russell. The Russell actually looks pretty good. So what we've obviously been seeing is rotation from NASDAQ, the Mag 7 specifically, and then you can see some of that here today. If we go out to the heat map, we're seeing a little bit of more NVIDIA being distributed into Oracle and CRM and Adobe and Qualcomm and other chip stocks like that have been taken out. And we're even seeing some of this on the financials as well too. So it's not really a super strong market here today. Russell's actually coming in just a little bit. Okay, so let's finish things out. Let's go to the Dow. And for the longest time, I said the Dow is looking so good for what we call a very traditional move here, which is strong off the bottom, thick in the middle. So what it does is, like, if you're going to run up the side of a mountain, you're not going to summit in one day. You're going to stop at a rest camp, and then the next day maybe you'll go after and do a summit push. This is the way things go. Range expansion, range contraction to range expansion again. So strong off the bottom, thick in the middle, rising to a parabolic tail. And right now I have the upper target for the Dow based on this big cup with handle pattern up here at about 43 or so, about 43,000. is where that measured move target is. We're almost there. So one final push to the upside as we get into the third quarter, and then who knows what's going to happen in 2025. Looks pretty ominous. So what I like about the daily chart is the daily chart is also running in this big consolidation. And when you see a breakout like this, you never want to see the price come back into the pattern. This is something I learned from chart patterns a long time ago, is that when you see this, it's okay to have a back test or a kiss goodbye before it takes off again. But you never want to see it come down inside the pattern again. That is a failure. That's a throw over. It's almost like this would be almost like a laundry clothesline, right? So you throw something over a clothesline, which would look like this, right? So you throw this over and it comes back down. So far it's done everything correctly, but it's going to have to keep on going above 41,000. And so we also have weekly chart in or approaching exhaustion right now. So it wouldn't be untoward. It would make a whole lot of sense for this to consolidate for a couple of weeks as we get through the meat of earnings season and figure out what it wants to be when it grows up. Okay, so that's the four major indices that we're looking at. Just for giggles here, I'm going to look at NVIDIA. Now, NVIDIA, what we're looking to do, and this may be cooperating here, is I would like to get a piece of NVIDIA maybe somewhere down here between 90 and 100. So I did not want to buy it up here at 140 after the split was up there. So there's always a little bit of upside after a split, but then there's always a post-split hangover. So I want to get this for somewhere less than 100. So what we can do with something like that, if we look over here at NVIDIA, if we go out maybe 50 days, right now at the money, the puts that are going at the money are about $10 or $9 to $10 or so. So if the price did get down to 100, I'd be able to sell the $100 put for what should be about $10 at that point, and that basically gives me either a 10% return if the price stays above 100 by expiration, or it gives me the downside protection of $90 per share cost basis, which isn't bad. And I can even add more insurance on top of that if I want to by buying some additional, basically what amounts to a collar for that. So keep your eyes on this. Don't be, I'm staying as patient as I can for the price to do one final shot to the downside. And that might be good. Now, there's no guarantee. This is a catch the falling knife trade. There's no guarantee it's going to stop at 100, but that is a good level of support. That's a swing test here. You can see former resistance becomes new support from above. So I'm going to hold off on that one for right now. Okay. Any other questions? That's the market read for today. So we have the S&P and we have the NASDAQ still in distribution, and that's mostly because of the Mag 7 is, flipping funds off. People are, piece by piece dismantling their holdings in the Mag 7, and they're moving funds obviously off to the Dow and over to the small caps because of the fact that interest rates could potentially be coming down. And all of those companies are funded by debt, so it's a big deal for them. And that's not even accounting anything for the upcoming election, which is going to be a wild card that is going to be just as difficult to call as it was back in 2016. 2016, the market went basically nowhere for several months before the election. Just went kind of sideways for a long period of time. And we know how to take care of that. Okay, well, nothing seen. Thank you, everybody, for joining me here today, the 29th of July. And we should be back into early August next week, and Dave should be back by then. So same bat time Same bat channel. Thanks, everybody. You guys take care. Have a great week and a good Monday. Bye now.